Good evening, everyone. First of all, I would like to say thank you to all delegates who joined today in this chilling weather of Delhi. So, round of applause for all the delegates first. On behalf of Mr. Chandrakant Salunke, founder and president SME Chamber of India and Federation of India SME Association, I would like to welcome you all to the Roundtable Conference on the theme New Age Financial Opportunities for Business Growth and Expansion, organized jointly with UB, formerly known as Create Avenue. I would like to say a few words about Chamber's activities. SME Chamber of India is started by Mr. Chandrakant Salunke, who is the founder and president of SME Chamber of India. And SME Chamber is a leading organization in providing support services for the last 30 years to the manufacturers, SME, exporters, service providers, mid-corporate, startups, and allied industrial sectors. The chamber is also supporting for the procurement, channelizing finance, investment, branding and marketing, import facilitation, setting up a new business and manufacturing units, identifying partners and joint ventures. UB is a principal partner of this event and it is India's largest debt platform which enables discover investment and fulfillment of credit. UB aims to collaborate with the companies that make an impact on the nation's economy, and they have worked with more than 3,000 plus enterprises across different credit rating to help growing this vision. Another such product is UB Flow, India's largest supply chain finance platform, which has financed supply chain across 11 sectors and disbursed INR disbursed 1,500 crores of capital, trade, and supply chain finance platform for corporates and lenders. Fixed income securities platform for institutional retail investors, loan co-organization platform for the banks, NBFC, fintech, and end-to-end scrutinization platform for the banks and NBFCs. SME Chamber of India, along with UB, completed four successful events at Pune, Mumbai, and Ahmedabad and helped more than 100 companies to raise 5x faster loan. Now we are in Delhi to support the entrepreneurs to get the faster loan. Now I would like to invite Mr. Chandrakant Salunke to give for the welcome speech.
Good evening, friends. On behalf of SME Chamber of India and Federation of Indian SME Associations, I welcome you all in this very interesting evening, chilling evening, and interactive evening because जैसे कि कहावत है ना, ठंडी में थोड़ी ज़्यादा करके नेटवर्किंग हो, बातें हो, तो मुझे लगता है ठंड कम लगती है, लेकिन यहाँ पर ज़्यादा बात होने से पैसा ज़्यादा मिल सकता है. तो ऐसा है कि समाओ विनम्र मिश्रा जी फ्रॉम एमएसएमई मिनिस्ट्री, हमारे दूसरे गेस्ट है देवांग जी, रणवीर जी है और शगुन जी है. So all these stalwarts are going to speak on the particularly how they can be helpful to your business, how they will helpful to grow your business, and SME Chamber of India will be happy to support you to connect, develop, and expand your business activity. As Ms. Sakshi told about particularly activities of the SME Chamber of India, we're doing for the last 30 years, supporting many entrepreneurs to go global, acquire advanced technology, identify emerging market, supporting for international cooperation. Those are from manufacturing industry and they are looking for any expansion, any development, connectivity. We can definitely support you. We are based Mumbai, but we have a connectivity all India level. We do a lot of activities all India level, and we support for the industries, particularly from the manufacturing industry, to connect with the international right business partners, and particularly for getting support for expanding their business opportunity in the international market. We know that running business is a difficult task. जैसे पॉलिटिक्स में पॉलिटिशियन डिफिकल्ट टास्क 5 साल के लिए लेकर चलते हैं, वैसा हम तो लाइफ भर चलते रहते हैं। तीन बातें हमारे इंडस्ट्रीज को लगती है, बिजनेस को लगती है, ऐसी कौन सी तीन बातें कोई बता सकता है मुझे? विजय जी छोड़ के आप बताइए। ओके, एनीवन? परफेक्ट, एनीवन? ओके, थ्री एम्स: मैन पावर, मार्केट एंड मनी। आज अगर हमारे इंडस्ट्री को फंडिंग टाइम पर मिलती है विनम्र जी, तो मुझे लगता है 6.33 करोड़ जितने हमारे 6.33 करोड़ हमारे जितने एमएसएमईज है और मैन्युफैक्चरिंग इंडस्ट्रीज है, लार्ज कॉर्पोरेट हो या मिड कॉर्पोरेट हो या मीडियम साइज इंडस्ट्रीज हो, जिनका टर्नओवर 50 करोड़ के ऊपर है, आज मुझे बताइए जो इंडिया का ग्रोथ बन रहा है, इंडिया, प्राइम मिनिस्टर साहब ने हमें एक टारगेट दिया है कि हमारा एक्सपोर्ट्स बढ़ना चाहिए। आज ग्लोबल रिसेशन आ रहा है, ग्लोबल रिसेशन में इंडिया में हम लोग बड़े मजे से बिजनेस कर रहे हैं। इम्पैक्ट कितना होगा और डर भी लगता है और डर भी नहीं लगता है, बिकॉज वी हैव अ स्ट्रांग लीडरशिप। और मैं जस्ट नाउ आई मेट बैंकिंग जॉइंट सेक्रेटरी, बैंकिंग डीएफएस के जॉइंट सेक्रेटरी, and I express my thoughts about how the industries and SMEs are facing problem for getting funding from banks. तो गवर्नमेंट का भी ऐसा रोल है कि जो संदेश जाना चाहिए बैंकिंग सेक्टर में कि हमारे इंडस्ट्री को टाइमली फाइनेंस होना चाहिए, अफोर्डेबल फाइनेंस होना चाहिए। समटाइम्स विजय जी, हमारे विजय जी, विजय गुप्ता जी है जो चार्टर अकाउंटेंट, दे आर सपोर्टिंग द लार्ज कॉर्पोरेट, लार्ज मीडियम साइज इंडस्ट्रीज ऑल्सो। हम सुबह उठते तो सोचते हैं कि आरबीआई की अनाउंसमेंट हो जाएगी विनम्र जी कि कल से 6% से लोन मिलने वाला है। ऐसा कभी दिन आएगा, सोचा है कभी आपने कि कोई भी इंडस्ट्री को एप्लीकेशन दे दिया है एंड देयर लोन इज पास इन 7 days टाइम? ये दिन आने चाहिए। अच्छे दिन जो कहते हैं इसी को अच्छे दिन कहने हैं कि हमारे इंडस्ट्री को, हमारे बिजनेस को, हमारे एसएमई सेक्टर को फंडिंग टाइम पे अफोर्डेबल फंडिंग मिलनी चाहिए। इसके लिए क्या क्या करना जरूरी है? जैसे अभी यूबी, यूबी का प्लेटफॉर्म एक बहुत बड़ा अच्छा एग्रीगेटर प्लेटफॉर्म है। दे आर सपोर्टिंग इंडस्ट्री पर्टिकुलरली टू चैनलाइज डिफरेंट टाइप्स ऑफ फाइनेंस। आज हमारे साथ पार्टनरशिप इनकी हुई है, हम उनके साथ पार्टनर बने। कारण ये है कि मेरे इंडस्ट्री, मेरे मेंबर्स का, मेरे एंटरप्रेन्योर्स का टाइम पे उनका जो भी इश्यूज है, प्रॉब्लम्स है और जो वैल्यू एडिशन होना चाहिए मिलना चाहिए, तो ही हम देश का नेशन बिल्डिंग में हम सहयोग कर सकते हैं। तो ये मौका है। चलिए मैं ज़्यादा टाइम नहीं लेता हूँ, ठंडी भी ज़्यादा है, बढ़ रही है बात, और सही मायने में वीरेंद्र मिश्रा जी भी एमएसएमई मिनिस्ट्री से बहुत अच्छा काम कर रहे हैं, टेक्नोलॉजी लेवल पे काम कर रहे हैं, बहुत सारे पॉलिसी में उनका रोल अच्छा है। तो मैं चाहता हूँ कि इस माध्यम से हमें कैसे, किस प्रकार से इसको आगे बढ़ाना चाहिए। तो ये डायलॉग हम लोग कंटिन्यू रखते हैं, और while interactive meetings we can have a more discussion on the point where we can give some suggestions, some recommendations to government as well as to UB also, where they can transform, they can develop, and they can connect with you for your requirements. With this word, I'm thankful to you, and thank you UB for becoming our partner for making Indian industry strong. Thank you very much.
Now I would like to invite Mr. Chandrakant Salunke to give the bouquet to all the dignitaries seated on the dais. Mr. Vinamra Mishra, Director, Ministry of MSME, Government of India. Mr. Ranveer Nagish, Senior Policy Specialist, G20 Secretariat, Government of India. Mr. Devang Sangvi, Deputy Vice President, Client Acquisition Group, UB. And Mr. Shagun Jain, Senior Vice President, Supply Chain Finance, UB Flow. Now I would like to invite Vinamra Mishra ji to say a few words about the future of fintech and its potential for SMEs. Over to you, sir.
Yeah, thank you very much. Obviously, it's pretty cold, and Delhi, being in Delhi, we've been thinking as of now that this year the winter was not quite at that level, but perhaps the winter, the gods have got to know that the Mumbai traffic is coming here, and with all its veracity, it has come down in the last 2 days, and we've seen quite a lot of cold in the last 2 days or so. So thank you very much, first of all, Chandrakant ji, for having me here. It's always a pleasure to be talking uh, to the people who are aware of what is to be done and how to be done, and to be interacting with persons who can actually help us ideate, uh, think about futuristic policies, and we at the Government of India level actually look forward to interacting with sharp minds, with people who are there in the market, who are neck deep into doing various things, and then they are actually in the process of assessing as to how the policies are working on the ground. And so it's a great way in which we are meeting today, and I'm sure with the ideation and with this power packed panel which is here this evening, something good is going to come out. And I'm also going to take a lot of note, and from the various questions that I'll be uh, getting to hear from you all, and interacting with you all, I'm definitely going to take a lot of takeaways from this session today. um, Talking about credit, yes, we understand that the MSMEs are really facing a lot of problems as far as access to credit is concerned, and this is one of the challenges which has been underlined and has been appreciated and has been taken into cognizance by the topmost levels in the government, and which is precisely why I must like to share with you all that uh, a, a high level chief secretaries conference is going on at this, while as we speak today here. A high level chief secretaries conference is going on in Delhi, in Pusa, where which is chaired by our honorable prime minister. And incidentally, the first theme of this conference was credit and formalization. And our secretary, our honorable secretary minister of MSME, gave the keynote in that session in the morning today. And this was followed by a very elaborate presentation on access to credit, and what more can be done in terms of what to be which can be done for increasing the credit access, finance access, and how more and more MSMEs, the problems that is faced by them in terms of access to finance is concerned. More and more MSMEs can take advantage of the various policies of the government. What are the best practices of the various states, since all the chief secretaries were there at that time, yes, today. So what best practices are already going on in various states? So it was a time to exchange notes, and then we take a stock of whatever is being done, what can be done in on the long term, on the medium term, and the short term basis. Uh, so we were also in the process of making a background note of formalization and credit. And incidentally, the other topic was for the MSME was generation of employment. So we all understood that yes, all these three outcomes are actually interlinked, and various nuances that the MSME sector presents itself in terms of various geographies, in terms of various sizes and sectors. It all combines into these challenges getting together, getting mitigated together, and then all these three things are going to be a one thing leading into another, and another thing leading into the other, and it is actually interlinked. And if we are going to settle one thing, it is definitely going to help the other thing. And if we're going to set, so if we are actually taking the MSMEs into the formal fold, for example, we are actually helping them to get into the entire gamut of support of the government, of state governments, of the central government policies. So the formalization, we think, is the first and the biggest challenge that is there. And I think uh, as Salunke ji told us that mm, 6.33 crore MSMEs are there, and as of now we are close to about 1.31 crore MSMEs who have already onboarded the Udyam registration. So that is again a challenge to how to bridge that 1.31 to 6.33 crores, and all the MSMEs which were assessed to be present in the country are getting onto the onto the formal fold. So once they are on the formal fold, they are going to get access to the credit, access to technology, access to infrastructure, to marketing. So so formalization is something which starts the entire process. So we are doing a lot of things as far as formalization is concerned. We are partnering with SIDBI because we understand there are about 4.5 crore informal micro units enterprises, IMEs as we say. And these MSMEs are, these micro units are either one person enterprise or two-person enterprise, and they also need the access of all these parameters of technology, of finance, of marketing. So we are partnering with SIDBI to get them into the formal fold. Similarly, there are other ways in which we are actually interlinking, interoperable. We are developing interoperability with the Udyam registration portal, the GST portal, as well as the TREDS portal. So that is something which is going to help uh, MSMEs onboard the TREDS portal. And once the TRED portal is onboarded by a lot of MSMEs as the sellers, the larger corporates, the CPSCs, the PSUs, the larger industries which are buyers of these, which I think UB is also working as would be working as part of the supply chain initiative, which are part of the supply chain of these larger corporates, are also then brought onto the folds of trade. So this is something which would actually kickstart the entire process. So Udyam registration, formalization is the key to credit, access to credit, and that is what I wanted to underline to start with. Then talking of what things are already there in the market as far as the credit is concerned, I think we have the annual credit plan of banks. The banks are working towards achieving them, but little goes on ground. The banks are actually being able to achieve their targets of PSL, the priority sector lending, uh, but the micro units, the smaller units, are not getting into the entire fold of these debts or loans. So why is it that and how the smaller units can also get access to the be a part of the ACPs, the annual credit plan, and how can it be done? So we ideated and we thought that yes, it should be the SLBCs must be playing a more important role. And well, while they assess the manner in which the funds are being dispersed, the funds are being dispersed on the district level, the SLBCs have a prime role to play, and therefore the targets are met, but it is also going to the deserving micro units, smaller units, and therefore being monitoring the process in which the SLBCs are acting is one thing which came out of the discussion. And I think, and we are going to emphasize upon the DFS to actually start working towards having a bottoms up approach, so to say, where we are thinking of not the top higher I mean bigger enterprises, the larger enterprises which actually consume the entire exposure limit of the banks, but the smaller ones are actually larger in number but lower in volumes. So they really don't matter as far as reaching the targets is concerned. But I think this is something which is at the priority level, priority as far as the loan disbursal is concerned, and therefore this is something which is definitely in the works. Then there was one, I think anybody from Tamil Nadu here, because Tamil Nadu government has developed a very innovative manner in which they are going ahead with the TREDS platform, where where the acceptance of invoice, which is the 45 days in which the invoice is to be accepted by the larger corporate, the buyer from the seller, that is the point where a lot of nudge needs to be done for the larger enterprise to be actually accepting the invoices. So they have created a set of people, a set of professionals who work with the larger corporates and kind of create that bridge at that stage to facilitate the larger corporate accept the invoices so that the entire trades process starts. And then at the end of it all, when the ba- uh, the uh, the large corporate has to return uh, the loan that the lending institution has given it, that is where the 180 days period is there, within which it has to return the loan which has deemed to be taken from the lending institution. That is where there is a backstopping mechanism, and they have developed a bank of their own. The government has set up a financial institution which is, I think, named as TAICO, which is the Tamil Nadu. I'm not sure about the full form of it, but this is something which is providing finance for supporting the larger corporates pay back the loan back to the lending institution. And also increasing the 180 days period to another 120 days by 300 days now. So that is the manner in which it is improvising on the Treads platform and plugging the pain points on both ends so that the trade platform is more effective and robust. So this is something which was discussed, and we've taken a note of it, and we have said that yes, even we can also come into the picture, and we can set up something kind of an alternate dispute resolution kind of a thing, or an ODR kind of a thing. And incidentally, our RAMP program, the Raising and Accelerating MSME Performance, which is a World Bank aided 6,000 crore rupees program, which was launched by Honorable Prime Minister last year, is developing this online dispute resolution platform, which is going to help not only these sub portion of the trades platform, but also other dispute resolution, which is the pre MSEFC stage. So before going to the MSEFCs, if the buyer and the seller are able to, I mean, take up their cases and actually are going to interact, then a lot of problems are solved. The communication setup is to be ensured just before going to the MSEFC. So pre-MSEFC stage is being handled through a very innovative ODR platform, which I think is in the works, and I think in another 6-7 months we are going to get to know about this uh, pre-MSEFC ODR mechanism, and we've got funds for this from the World Bank, and we are in the process of developing this. We are working with the Ministry of Social Justice and Ministry of Laws rather, and we are developing the alternate dispute resolution mechanism. So this is something which is again which is going to help the MSMEs. Again, I think there is another good opportunity which is there. I mean, the banks are largely depending upon the CIBIL score, but why can't we generate our own credit rating system? Like the MSMEs, based on their payment of utilities, based on their other tax filing documents, based on their water bills, based on their electricity bills, we can definitely say whether or not the MSME is working, is in fine fettle or no. So why to assess the MSMEs only on the basis of their CIBIL score? Why not generate? Why not we can generate a alternate MSME credit rating system? And this is something which is again something which is being tried out, I think, in Telangana, where they have, and also in Tamil Nadu, where they have developed a mechanism of creating an alternate MSME credit rating system, taking into account these various key points which are definitely indicative of the state of affairs of an MSME, the state of health of the MSME. And I think Telangana is developing something called as a MSME health report card, which shows whether or not it is in reds or something. I mean, just to assess the financial health of the MSMEs, and if the health is okay, and if it is given some credibility by the government, the banks will have to take up and sit up and take notice, and not only entirely depend on the CIBIL, but also use this alternative credit rating systems to actually lend and support the MSME as far as credit is concerned. So another, I think, co-lending mechanism is also being developed, where the NBFCs will be partnering these commercial banks. The commercial banks have the advantage of having lower lending rates, and the NBFCs have the advantage of having a greater reach. So why not partner them? Why not have a marriage of the NBFCs and the commercial banks, and work on each other's advantages and strengths. So while the commercial bank's strengths is the low cost of lending, and the NBFC's strength is their reach. They can reach the remotest location and can provide the funds. So we are also thinking of, while co-lending is in the process of being in existence, we are also going to support this co-lending measures in terms of creating the percentages of credit support or the credit risks with the NBFCs will be taking on behalf of the commercial bank. So this is again something which is a fintech which is going to come in a very quick time. And so I think all these aspects are some are the few things which are already in the works, and it is showing few results. We are in the pilots of many of these, and from the empirical evidences, data driven evidences, we are quickly improving upon few of these, and then things are coming into the picture. Also, we were thinking, Salunke ji told about money market. So market was one of the, manpower was another, money and marketing. So marketing, we understand that marketing, yes, the MSMEs products needs market, and the people don't know what the product is, how the product can be marketed. So again, in the RAM program, we are developing the NSIC already has msmemart.com, which is a B2B kind of a portal. We are trying to increase the efficacy and improve the gamut of the MSME Mart by converting the B2B portal to be a transactional portal, and also it to be a B2C, B2G portal. And this would be ensured through onboarding the ONDC, which is something which is again a very big ticket exercise, which has been started by DPIIT and Ministry of Commerce. And the onboarding of MSME Mart onto the ONDC, whatever it would be required as far as e-cataloging of the MSMEs is concerned, providing some vouchers for them to be initiating the e-cataloging so that they can actually onboard the ONDCs. So this is something which we are building in the RAM program, and the program has just started, and we've talked to a lot of stakeholders. The concept note is in the process of being finalized, and so once the MSME Mart onboards the ONDC, and the ONDC will have a pan India presence, the e-marketing is going to be taken care of to a large extent. And there's another, I think, the MSME digital program, which I would like to refer to at this moment, where the MSMEs can actually have their own websites. They just need to key in a few of the important parameters of their enterprise, and they have to choose from a few templates which would be already populated on the website, and then they'll be getting their own website, they'll be getting their own ERP solutions. So for you to be actually onboarding the digital bandwagon, you'll have to have a digital presence. So digital presence would be ensured by this MSME digital program, where after keying in a few parameters, like just like you create your email, you create your own website, and once you have your website, you can take it from there. You can do the cataloging, you can then onboard the MSME Mart, and then the MSME Mart is automatically connected to ONDC. So this is how I think marketing is going to get a great fillip. And in fact, the RAM program also supports the PMS, the program and market, the procurement and marketing program of the Ministry of MSME, which is again supporting the MSMEs into getting uh, mm, domestic, participating in the domestic fair, into the foreign fairs and exhibitions. So since a lot of funds are going to be flown into the PMS scheme, so it is going to enable more and more MSMEs participate, and we are going to subsidize their participation in various foreign and domestic fairs and exhibitions. So these are a few. I think the list is pretty long, but I touched upon a few things which are into formalization, into marketing improvement, and into credit access. So uh, I think with the support of the stakeholders, with people like UB who are into supply chain financing, which is again something which is really very very helpful, because MSMEs are, when we say MSMEs are part of 45% or 49% of the Indian export, it is not the MSMEs who are exporting, but they are actually becoming a very, they are actually a great cog in the wheel for the entire supply chain of exports. uh, and so making us a very robust supply chain would be actually making these MSMEs more competitive, more financially viable and independent. And therefore I think any such support which I think I'm going to hear from the experts here is going to help the MSMEs. And supply chain financing is something which is really a great way of supporting the MSMEs, not only in terms of finance but also in terms of their positioning in the entire in the value chain. And that is going to actually not only take care of the finance but various other parameters for the MSME. So congratulations to UB. I must congratulate SME Chamber of India for having this program today and for having me. And I hope with the as the session goes on, there will be a lot of takeaways for each one of us. Thank you very much.
Thank you, sir. Now I would like to invite Mr. Devang Sangvi, Deputy Vice President, Client Acquisition Group UB, and okay, and also Mr. Shagun Jain, Senior Vice President, Supply Chain Finance UB Flu.
Uh, Thank you, Vinamraji, for setting up the context of creating an access to capital, and thanking you everyone once again for becoming a participant on this frosty weather. Quick introduction. I manage the institutional business for UB. CFA by profession. I am in this credit space for almost 10 years now. Now, before we jump on to why did UB come into picture, what was the vision behind creating this organization, it is very important for us to understand what was the need of creating this organization, right? Most of us know, right, today the debt penetration in Indian market is very limited. Now, just to put some numbers, as Vinandraji also mentioned, the access to capital itself is so sparse. Today, the corporate debt to GDP ratio in India is almost 74%, which is 5 times lower than a developed country like US. I mean, forget about a developed country like US, even a developing country like, say, Malaysia, South Korea, they are way, way ahead when it comes to the access to corporate debt, right? In fact, it's very surprising for us to understand a lot of these developing economies have debt markets bigger than equity markets, which is not the case with India. And that is why we decided to create an ecosystem of debt market in this country wherein every corporate, and when I say every corporate, I'm not limiting myself to SMEs, MSMEs. Every country in this nation should get a proper access to capital, and that's why UB came into picture. So UB, we are India's largest B2B platform, a unified platform providing debt products to every corporate in the country. We have, in the last 2 years of our existence, facilitated more than 100,000 crores of debt volumes on the platform, almost creating 1 lakh transactions on a daily basis on both wholesale as well as retail front, right? I mean, a lot of people today are using marketplaces which they are not aware of, right? I'm sure everyone here is using Swiggy, Zomato, Uber, Ola. These are what? These are marketplaces, right? Now, what is a marketplace? A A marketplace is basically a tech platform which enables two parties to come together and transact. UB is nothing but a two-sided marketplace which enables any corporate just to get registered on the platform, specify the requirement, and there are lenders on the other side who are integrated with us already to look at that requirement, right, and satisfy it. Now, just to give you some numbers, we are today working with more than 3,000 borrowers. When I say borrowers, these are companies right from unrated space to listed players, the likes of JSW, Vedanta, everyone today is there on our platform, transacting with us across different products, right? We are offering loans, we are offering bonds, we are offering supply chain finance. As Vinamraji mentioned, we are in fact the first player in the co-lending space to offer products to fintechs and NBFCs, right? We have recently started our real estate and infra platform as well to enable infrastructure companies to get access to capital quickly and through a tech mode. Now we are working with more than 750 plus lenders. These lenders are already today integrated with us, having specified their policies and preferences. These are banks, these are NBFCs, these are mutual funds, these are development financial institutions, these are offshore investors, these are foreign banks, etc. Everyone is there with us today on the platform. Now, just to take you back, right, this organization was started in October 2020 by a gentleman called Gaurav Kumar. As I said, the vision was to create the biggest ecosystem in the country today. Humbly, we received a lot of interest from different private equity investors. We became fastest unicorn last year, having raised more than 137 million. Now, as I said, the vision was to create India's largest debt ecosystem, right? But what we were trying to change, obviously, there was a lack of access to capital in the MSME SME space, right? But apart from that, there are a lot of larger institutions also who are facing few hurdles when it comes to raising debt capital. Obviously, there is a limited access to lenders. Now, unlike an equity market, right, a debt market is basically an OTC market, over-the-counter market. It works on negotiations, right? There are cash flows, there are credit ratings, there is everything, there is security. Everything is actually being negotiated today with different lenders by a corporate to get the best pricing. Today, as a platform, we already have 750 plus lenders, as I said. So a corporate can actually come onto the platform and discover what is the correct price for me, right? If I want to kind of look at 10 lenders for a specific transaction of mine, I can just come on UB, specify my requirement, specify the expectation that I have when it comes to pricing, and see what interest am I getting from these lenders, right? So price discovery is the biggest, I would say, moat for UB to kind of enable not only MSME SMEs but larger institutions as well. The turnaround time, obviously, for any transaction, let's say a conventional working capital transaction, takes more than 2 months to kind of finish off. Now today on UB, as I said, we have different lenders. Apart from that, we are today sitting with almost a team of more than 1,000 people assisting every transaction, providing each and every detail of where your status of the transaction is with a specific lender. And not only doing that, but creating a competition amongst the lenders on the platform to come back to you quickly and satisfy a requirement as soon as possible, because if they don't do it, there's some other end on the platform which will actually satisfy it, right? So the turnaround time for any transaction automatically reduces. We have a complete, so just to give you a sense, as I said, we have 1,000 plus people today within our team. Approximately 35% of our manforce comprises of tech and data science people, right? So we're bringing up technological changes every day. We have a platform which will not only enable corporates to raise money quickly, but it also enables borrowers to kind of understand who the other party is, right? So we are providing analytic services to them. We are providing fulfillment services to them in the form of, let's say, digitization of stock statements, getting data quickly, creating a database for the lenders and the credit committees to look at, right? Which is today a tedious task for any lender, be it a bank, be it an NBFC, be it a mutual fund. The credit understanding itself takes around a month. So obviously the entire debt raising process kind of, the TAT for the debt raising process kind of moves a lot faster, right? If you have all the data place in place. Now, as I said, we have almost 35% of our manforce in the tech space today. Now, how are we doing it, right? So I'll just quickly kind of take you through how you as an entity can register onto the platform and utilize our services. Now, let's say a corporate ABC Limited needs a term loan. right? You register onto our platform, you specify your requirement, specify brief detailed contours about your transaction. Now we are today integrated with MCA, right? So all the financial data today, which is public, you don't have to provide me anything. All the financial data today, which is public, get automatically fetched from these public sources. And a short snippet about your company gets created onto my platform for the lenders to look at. These lenders will get a sense of, okay, this is corporate ABC, this is this transaction requirement, and this is transaction expectation. Will I be able to provide that to him? If it's a yes, automatically you will start seeing expression of interest coming in from different investors onto the platform. Does that mean you are actually becoming a public to all the 750 lenders onto my platform? The answer is no. You can come onto the platform, specify which investors you want to work with, which investors you want your profile to be visible to. I mean, you can compare us with somebody like, say, a Policy Bazaar. You go out there, you explore, you get a lot of interest in terms of what's the interest expectation is for my, let's say, a home loan, right? It's a very similar concept for a corporate. You come, you explore. If it makes sense to you, move ahead with the credit evaluation process. If you move ahead with the credit evaluation process, don't worry. I have a relationship manager also, because unfortunately, debt markets today still work on negotiation, still works on documentation, still requires a couple of months of closure. So there is a relationship manager from my side who will assist you and ensure you get the money at the right time at the right price. Sure, sure, please. Right. Exactly. So for a greenfield project, let's say if you're looking for a project finance sort of a requirement, right? As a lender, what would I like to look at, since you're a new entity coming to picture for the first time? Your past experience. Is there a corporate guaranteeing picture? If yes, I would like to know the details of the parent entity, right? Exactly. So you, as a parent entity, will have to get registered with me on my platform for this specific requirement of yours. Because for a lender to take a call on you, he has to take a call on your parent entity and understand the credit. So in that case, your parent entity will be registered on the platform, right? Because I'll tell you, right, how it works. There are two ways of actually enticing interest of different lenders onto the platform. One is obviously you select which lenders you want to work with. The other and the most interesting piece is we have a logic slash algorithm on the platform already, which is being made by my data science and tech team, depending on what transactions we have executed in the past and what transactions are we seeing in the market, right? Just taking your example forward, if you're looking for a brownfield project, and in the past, if I have my platform has concluded, let's say 5 deals with say 3 foreign bankers and 2 private bankers, there will be a recommendation engine that will work at the back end, giving you a sense that, hey, there are 7 lenders which actually match your profile and match your requirement. Do you want to select them as well? So while selecting the lenders on to the platform, you will actually be able to create a bouquet of lenders systematically selected by you, which will actually work on the transaction. So there is a push model that we have, wherein we actually give you a recommendation, because not every entity will actually get a sense of, do I go for NBFCs, do I go for private banks, do I go for PSUs, which might take a lot of time, or do I go for foreign banks, right? So there is a recommendation engine that UB has, which will give you a suggestion of lenders which you should work with. And obviously you as an entity have few lenders in your mind. So we will create a curated list, and each transaction will flow to each lender real time within a fraction of a second, right? You click on a button, the transaction will flow through these lenders. Every lender's regional officer registered with me on the platform will get a notification in an email that this is the entity, this is the transaction expectation. And this is how we are creating different types of transactions onto the platform today, right? So these are the few, just taking your example, these are the few purposes that we are trying to solve, right? If you're entity looking for a capex transaction, if you're entity looking for working capital, you need promoter funding, acquisition finance, non-bank end-use financing, trade finance, refinancing, replacement of an existing lender with the other one, project financing, as we discussed, right? Every product is there today onto the platform, right? So as I said, we've kind of, so both types, right? So today, a lot of lenders, specifically bankers, have a separate department by the name NEG, New Economic Group, whose main focus is to fund startups, right? So, in fact, when we started this organization, we also had a specific segment only on the NEG space, and today we have worked right from the entities the likes of Farm Easy, Cast 24 off business, and we are working with a lot of startup players today, right? We have closed almost 20 around 18,000 crores of transactions only with startup entities. Obviously, these are now large institutions. We don't call them startups now, right? But we prefer working with both startups as well as mature entities. So the entities range on our platform starts from a startup player, and I'm today also raising a 500 crores Muthoot NCDs on my platform, right? So the type of the institution, the scale of the institution is not a challenge, right? However, we do have a specific gating criteria. We only prefer to work with entities, right, on the wholesale space, which have a top line of 100 crores.
On interest, negotiation has to be done directly with the lender or through you.
So we have a team, as I said, we have a relationship management team who will actually assist you on every bit.
No, but then please don't take it otherwise.
Oh, please, I mean,
You
I'm
also must be getting some commission, otherwise how your company will exist.
right.
I don't know whether from lender or the one who takes the loan or both. I don't know. So what to
I
ensure?
have an answer to your question in my next slide itself, right? So I'll answer it in two ways, right? First, how are we actually adding value for a borrower like you? Because as a business model, we charge all the corporates who are registered with us on the platform only and only when they get a sanction letter through my platform and they accept it. My mantra is very simple. I make money if you make money. If you get a term sheet, if you get a sanction letter, forget about term sheet, if you get a sanction letter through my platform, if you accept it, if it makes a commercial sense for you, only then there is a platform fee which is involved. You may see multiple interests from different lenders onto the platform. You may see multiple sanctions coming to you through different lenders onto the platform. But if none of them is actually within the expectations that you have set, there is no fee attached. You don't have to pay me anything. There is no registration fee, there is no onboarding fee, there is no discovery fee, there is not even a negotiation fee that you have to pay to my relationship manager. There's nothing, there's no fee,
No registration fee.
no registration fee.
No, but if there is no registration fee, you are not registered. And if you are not registered, you cannot ask for this, you cannot request for loan or whatever.
Sorry, and just to answer your question, we are not charging any registration fee today, right? You can come onto your platform, you can specify your requirement.
Your company is not registered. So you are authorized aggregator from the RBI. You can tell me.
Oh yes, we are. We are an authorized aggregator, right? I mean, I would not like to call ourselves as an aggregator because we are a platform, right? I don't think so. An aggregator provides you services of what's happening in the market today.
You had said that one has to be registered, then apply.
When you say registered with me on the platform. I mean, you have to register on my platform to raise this. Absolutely, but the registration cost is none. In fact, we have a web-based services. You can just explore now on your mobile and see how it works, right? And register on the platform, right? So there's no registration fee again, right? We only charge corporates only on the completion of the transaction, right? Now, obviously, if how are we adding benefit for a corporate like? So one, access to capital very quickly, right? Second, there is a, as I said, dedicated relationship manager allocated for every transaction. So there is always a manual touch along with the tech touch. Third, we have seen over the past, and this is absolutely based on the data that we have maintained, there are expression of interest coming in onto your specific transaction requirement within 3 to 4 days of registration, right? So there are lenders on the other side who are more interested in working with you. It's just that they haven't explored you and maybe you haven't explored them, right? Fourth, we also enable lenders to kind of carry out credit analysis. So last year we acquired two companies, one by the name Compository, which is an analytics company providing services to different NBFCs and banks, and the other one which goes by the name Spocto, which is an AI-based collection company, right? Again, providing services to different lenders. So these are the bouquet of services that we provide to our lenders. So for our lenders, we are not only an origination agent, right? We are beyond that, right? We provide them analytics. So we are basically a one-stop shop for any lender also. If you represent a business side of a bank, you can get business from me. If you represent the credit side of a bank, you get analytics from me. If you represent, let's say, a fulfillment side of a bank, there is a fulfillment data available today on the platform, right? Now we have a few case studies, specifically coming from a few of our clients who have recently transacted with us. This was one of the recent transactions that we carried out for India's third largest glass industry company, which goes by the name Gold Plus Glass. Again, a Delhi-based company itself. We have raised 430 crores for them, a combination of both working capital as well as term loan. Right. In fact, this was one of the few companies on the platform that actually saw 20 lenders interest. And the best thing was, on an average, we brought about a price savage of almost 3 to 3.5%, right, vis-a-vis their current balance sheet cost. One of the energy companies, as sir rightly asked me, do we work with startups? Yes, we do. This is one of the startups based out of Bangalore, which goes by the name Zetwork. We've raised 200 crores for them. Almost reduction in disbursement time by 50%. Right? These are a few borrowers who have been transacting with us on the platform. Be it Hero Group, we have Hero Electric. We recently closed an acquisition finance transactions for Barbecue Nation. We are working today with JSW. We are running a larger supply chain finance program, which I think Shagun will mention, with Vedanta as well. Right. So these are the few borrowers that are using UB today. Right. Now, just to take this discussion slightly more in detail towards supply chain finance program, I would like to invite Shagun and take this forward. Thank you.
Thank you, Devang. It's good to be here today in this cold evening in Delhi. What I'll do is I'll take you through what we do at our supply chain finance platform. So, in terms of supply chain, what we essentially do is we do an anchor-led supply chain business here. That means we support counterparties or ecosystem which are supplying to large anchors or which are buying from large anchors. So there is an anchor corporate who is in between, who is at the center of what we do, and we try and enable credit flow to his ecosystem, either to his supplier ecosystem or to his buyer ecosystem. Now, we are now the largest non-trades platform in the country. Non-trades meaning other than trades, because trades is promoted by the government and also it has a regulatory favor and push by the government for all large companies to come onto the trades platforms. Similarly, most of the banks are also operating on the trades platforms. What we do is beyond MSME funding, which is done through the trades platforms, we also do MSME funding through our UB platform, UB Flow platform on the supplier side, which is a vendor finance, and on the customer side, which is dealer distributor finance. Today, we have more than 50 large anchors on our platform. They are covered through 12 different sectors. We have approximately around 1,000 vendors and dealers of those large anchors who are on our platform. We have now disbursed around 3,000 crores in the last 2 years of operations which we have had. We serve all kinds of corporates, right from a AAA rated corporate to unrated, and also to a company which is very lowly rated, which is triple B rated, double B rated companies also. They find capital on our platform from a plethora of lenders. Now, who are the lenders? We have around 20 banks and NBFCs who are supporting the flow of credit through our platform. So, what exactly do we do here? So an anchor corporate comes to on our platform. He creates a program for a vendor finance or a dealer finance requirement. Once this program is created, then there are 20. As of now, we have 20 lenders. We are adding more lenders. Probably by end of March, we'll have around 30 odd lenders on our platform. They see which are the corporates. They see what is the size of the requirement, and they express interest. Then we get them connected to each other, and the program starts off then. So what are the benefits and how does it help? So the biggest benefit is discovery. Okay, there are 20 lenders and there are multiple anchor corporates who are there on the platform. They can discover each other. They can get the best price what they want. Third most important point is the entire ecosystem gets financed. There might be banks who might be financing larger MSMEs or MSMEs with better credit profile, there will be NBFCs who will be financing smaller MSMEs or who have weak credit profile. So multiple lenders who are there will be able to finance the entire ecosystem. Plus, we also provide an end-to-end digital journey. We try to do a frictionless process. Everything is digital. It's online. The turnaround time is very, very quick here. Now, all this will help the corporates and also the MSMEs, the ecosystem, the suppliers, and the customers to get the flow of money going rapidly through the system. Now, essentially, it is an off-balance sheet item for a large corporate. That means a corporate doesn't need to take money on his balance sheet. We enable movement of capital through the suppliers and the customers. Okay, what is essentially the problem we are trying to solve? I told you earlier also in the last slide. Okay, one lender doing one program with a large corporate will not be able to solve the problem of finance, because a large corporate will have all kinds of suppliers and all kinds of customers. There'll be suppliers who are large, there'll be suppliers who are small, there'll be suppliers who are in tier 1 cities, there'll be suppliers who are in tier 2, tier 3 cities, there'll be suppliers who are in one region of the country or multiple regions of the country. But probably a lender might not be able to operate in all these parameters. A lender like a south-based lender will only operate in south. He will not be operating in north and east and west. Similarly, banks will only operate with the larger size vendors and dealers. Now, this is what our platform solves. Our marketplace, what we do here is we bring multiple lenders, multiple pools of capital, which can be given to the anchor corporate and his ecosystem. What happens in this case is the different kinds of customers will get capital at different price points, because there are multiple lenders who are involved in this transaction which is being put onto the platform. So essentially what we mean to say is supply chain is not homogeneous. The supply chain is heterogeneous. It can be cut into different categories, and those different categories can be financed by different kinds of lenders. Now, vendor finance is something which is pretty well known, because the Treads platform operates on a vendor finance proposition. There are suppliers to large corporates, and large corporates will accept the invoices of the suppliers, and then the payment is done by the banks or the NBFCs to the suppliers, and they get the money upfront. So on the due date, which is 45 days, 50 days, 60 days later, the large corporate makes the payment to the lender. So this is fairly well established product. Now the government is also pushing in a lot. We heard from Vinamra also, a lot of effort is going on from the government, from the Ministry of Small Enterprises, in terms of promoting the Treads platforms through the government and also through the various state governments. Now, all the central undertakings, the state government undertakings, are all slowly coming onto the Treads platform to ensure that all the purchases which they do from MSMEs, they accept the invoices on the Treads platform, and money flows through the SMEs through the Treads platform. Now, there are multiple benefits of vendor finance. One is, once a vendor finance program is enabled, that means what will happen is suppliers will get a confirmed capital. So suppliers know that once they raise an invoice, they get money. Second is, the large companies also, they get extension of the payment terms. What happens is, if there is a supplier, if there's a relationship between a supplier and a company, and there's only a fixed tenure of 30 days, but once a bank or an NBFC comes in, that credit period can be extended to a larger tenure. From 30, it can move to 90 or 120 days. So if both the supplier and the anchor corporate also gets a breather in terms of sparing out capital. Now, third one big advantage for the larger corporates is deleveraging. Now, what is happening is, in a lot of cases, the companies take debt on the balance sheet and then they pay out the suppliers. But in this case, what will happen is there are multiple suppliers which can be underwritten and money can be given to them, and the corporate doesn't need to take debt on its books. So the corporate is more incentivized to come on the platform and also enter into supply chain finance programs. So this will ensure that the debt goes down and the credit profile increases. Similarly, on the dealer distributor side also, it is the opposite side. What happens is, it helps in companies to reduce the day sales. This means this means a large amount of receivables which the company has to get from its customers. When it gets financed to banks and NBFCs, the company gets the money upfront. So once the company gets the money upfront, it can do much more business. Second is, the dealers, distributors also get capital from the banks on an unsecured basis. So what happens if they get additional capital? They will be able to purchase more. They will be able to do extra business. And third most important thing is, it eliminates the risk for large corporates. Today, the large corporate is carrying a risk of a dealer distributor not paying. But once a financing mechanism comes to play, then the risk moves from the company to the lenders. So the company here is benefited by removing risk from its balance sheet, by getting money early, and also by generating extra sales by enabling credit to the dealers and distributors. So this is essentially what we are doing at UB currently, is where there is a corporate involved, and then we try to finance a supplier ecosystem or a customer ecosystem. So these are some of the corporates who are there on our platform. Today we run the largest dealer distributor finance program for Vedanta Limited. So we have more than 150 counterparties or customers of Vedanta who are on our platform and who are availing of finance. We have some marquee names like JSW Group, Zetwork, and we have Khadams and Kirloskar Group also operating through our platform. So as of now, we have approximately 100 corporates who are registered, and this is increasing day by day. And if any of you are dealing with large corporates, we would be more than happy to discuss and see how we can enable those large corporates to come onto our platform and enable finance for you people. Now, how it works, I told you earlier, a corporate comes on the platform, he creates a program, the profile is complete. If the profile is complete, then he gets expression of interest from multiple lenders. Once the expression of interest is received, he can decide with which lender he wants to work. Once he decides that he wants to work with these three lenders, we help them negotiate term sheets. Once the term sheet is negotiated and the program is put in place, then the cooperative will invite his vendors and dealers onto the platform. Now, once the vendors and dealers are invited, then we help in the risk assessment of vendors and dealers by the lenders. Post that, then the vendors and dealers can go live on the platform and start transacting on the platform. This is how it flows. It is a fairly simple process. It doesn't take much time once the program gets sanctioned and is put onto the platform. Yeah, I'll end here. This is essentially broadly what we do. If you have any questions, we are around here. You can ask me now, or our team is also sitting here. We would be more than happy to address.
How you do the process of NPAs and other defaulters when you go for financing and this is not matured?
So what happens is we are only a facilitator or a marketplace platform. Okay, so the overdues or the NPAs are taken care of by the lenders themselves. Okay, now besides the lenders doing the work, we also have a collections platform called Spocto. Okay, now this collections platform Spocto, what it does is it helps in collecting money from the borrowers. So this is one additional service which we also provide, but it is sought after by the lenders. If a particular lender wants it, we provide the service. Otherwise, he has his own collection team or his own collections department, which will go and collect money from the borrowers.
This is the reason that you have taken that company as acquisition?
Yes. We bought Spocto some time back because we wanted to give the full stack credit, right from giving money to collecting money on behalf of our lenders.
What is the percentage of such type of?
I didn't understand.
How much percentage of this immaturity of loan disbursement and loan square up?
See, at least I'll speak for my supply chain finance platform. At least we have had zero defaults in the last 2 years on our platform. We are very fortunate for running such a good business. There are delays here and there, but we help manage lenders collect the money. And fortunately, no lenders lost money till now in the last 2.5 years. I'll wind up. Thank you so much for listening. Thank you.
Thank you, sir. I would like to request Mr. Devang Sangvi, Deputy Vice President, Client Acquisition, UB Group, to give a token of appreciation to Mr. Vinamra Mishra, Director, GNTP, Ministry of MSME, Government of India, as he wants to leave early. Hello. Now I would like to invite Mr. Ranveer Nagesh, Senior Policy Specialist, G20 Secretariat, Government of India.
Yeah. So as I was saying, I work as a senior policy specialist in Mr. Amitabh Kant's office. And before this, I was at Niti Aayog for about 6.5 years. So my topic today is I'm going to be talking about taking a bit of a macro perspective I think our panelists here had run an excellent job of talking about some of the micro perspective. So I just want to bring in a bit of a macroeconomic perspective as to how we see the global economy evolve and where India stands. So recently, the IMF chief has said that one third of the world is expected to head into recession the following year. This is because of weakening economic activity in US, Europe, and China. China, as we know, with their zero COVID policy, experienced lot of lockdowns, especially in the first half of the year, and that's going to weigh heavily on their economics going forward. And in the latest World Economic Outlook presented by the IMF, they had cut their global growth forecasts considerably. And what's interesting is that next year is going to be one of the weakest years for global growth, barring the financial crisis of 2008 and the peak COVID impact in 2020. So the global economy is certainly facing a lot of headwinds, initially by COVID. So, sorry. Yeah, so some of the major risks to the global economy is that there's going to be persistent inflation in the face of supply shocks. As we saw in Europe, the geopolitical tension between Russia, Ukraine, the war, it sent energy prices soaring completely. There were shortages of fertilizers, there were shortages of food over the world. So that really spiked inflation considerably. So what happened was then central banks in response, they raised interest rates also, which in turn then raises the cost of borrowing throughout the economy. And another thing that weighs heavily on global growth in the coming year is that advanced economies take diverging policy paths, as in they tighten at different paces. Some tend to look towards monetary loosening. So this policy mismatch across countries is likely to weigh heavily on growth in the future as well. Now, what happens with tightening financial conditions when interest rates rise and countries which are exposed to a lot of global borrowing? What happens is that the US dollar strengthens and the interest cost that they have to pay increases as well. So, as we saw in the case of Sri Lanka recently or Pakistan, where a lot of the distress originating in financial markets spilled over to the rest of the economy, and the government also had to resort to bailouts from the IMF. So in emerging markets, this is definitely a big risk going forward for the coming years. So all of this comes at a backdrop as the world faced multiple crises. We were already amidst a climate crisis. There was very slow progress on SDGs. 2030 was our target, but we're still far behind where we need to be by now. Then COVID hit. COVID entailed a lot of job losses. There was a lot of businesses that uh, went down with it. And then what happened was countries to fight the economic impact of the pandemic, they resorted to fiscal stimuluses. And as in the US, we saw in the UK, but a lot of the developing and emerging markets as well. So what happened was, as growth faltered due to this geopolitical crisis, their debt levels spiraled out of control and led to debt distress in a lot of emerging and developing markets. Like I said, as we saw in Sri Lanka, how prices and debt spiraled out of control, leading to a cost of living crisis and ultimately huge protest in those countries. And then, just as the world was reeling with this debt crisis, the Russia-Ukraine war happened, and then we saw energy prices spike, we saw natural gas prices spike, food and fertilizer shortages, which then led to a food and energy crisis in the world. So really, the world was really coming off of multiple crises before this geopolitical crisis hit us, and that is what's really weighed heavily on the economic recovery, which was so important post-COVID. So now, despite global headwinds, as we see, India remains a global bright spot. And this is not me saying it, this is the IMF chief who said this a few months ago. Because just today we had our GDP results released at around 5:30, which said that we would grow at 7% in financial year 23. And this is where the world is expected to see a recession. India is going to be the fastest growing large economy. Our macro fundamentals are very strong compared to others. Our forex reserves are at healthy levels. Our taxes are at growing at healthy levels. Manufacturing, we're seeing decent growth, at least what the PMI results are showing us, high frequency indicators are showing us. FDI is coming into India. The world is interested in India's economic progress, and it's reflected in the capital flows that we're seeing. And perhaps most importantly, in my opinion, is that India, we've emerged as a leader in climate action as well. So we submitted our nationally determined contributions first in 2015, where we committed that by 2030 we'll have 40% of our electricity installed capacity powered by renewables. We met that 9 years ahead of schedule in 2021. So really, at a time where the world is going back on a lot of their climate commitments, especially the developed world, which has committed 100 billion in climate finance since 2009, India is really taking a lot of action towards decarbonization and setting us up to be one of the most competitive economies of the future. So I'm going to talk about a little bit of India's G20 priorities, since this is our presidency year and we took over in December, starting December 22. So I think the first one is focus on technology. I think our panelists have talked about that extensively, how we can usher in technological transformation, leveraging our digital public infrastructure, which today is amongst the best in the world, I would say. Because at a time where, let's say in the US, when their relief checks went out, they were actually mailing checks, and if you have to file income tax, you have to fill in a form, go to the post office, and then ensure that it reaches there. Whereas in India, a lot of things have already come in online, and in many ways we're far ahead. And UPI is another fine example for public digital infrastructure, which has really transformed the way payments work. So India's priority would be to bring into focus the power of tech transformation and digital public infrastructure in accelerating progress on SDGs, for instance. On health and education, we know how during COVID, health and education took a massive toll. Learning outcomes fell, people lost access to education. So that is definitely a focus area for India, which is accelerating progress on SDGs. The third is Life, Lifestyle for Environment, which was launched by our Honorable Prime Minister. The premise of Life is that climate action is rooted in individual behavior, and individual climate action is also key to the whole fight against climate change. We aim to work towards getting a green development deal off the ground, which underpinned by strong climate finance. And like I mentioned, there's a lot of negotiations going on about the quantum of climate finance that is to flow from the developed countries to developing ones. Because historically, if you see, about 60 to 70% of the historic emissions have been made by the countries that we now call developed. So that's left very little room for countries such as India and China to grow the way they have. So the just green transition is something that we're working on. Finally, accelerated, inclusive, and resilient growth is another key priority of India's to push during our presidency and through the various Sherpa working groups and the finance track and our engagement groups. And more importantly, what we're also looking at is the multilateral institutions such as the World Bank, IMF, Asian Development Bank. A lot of them were set up in 1945 post World War II in the Bretton Woods era. So a lot of the contention of developing countries is that these institutions were set up for a different time, and now times are changing and their role needs to change along with the times. So for example, how can multilateral institutions ensure that climate finance flows to developing countries? I mean, for instance, India estimated to meet all our climate financing requirements, we would need investments of $2.5 trillion. And in context, India's economy size in 2021 was about $3.1 trillion in current terms. So this is a lot of money. And where is the financing going to come from? So, I mean, public sources of funding, yes, definitely. But we also need to leverage private capital from across the globe and to flow into India. And so that is what we're looking at in terms of reforming multilateral institutions. And finally, a priority, as the Prime Minister highlighted, would be to showcase the power of women led development in India. There's a lot of work that has been done in terms of financial inclusion and in opening of bank accounts and through mudra loans. So we are also aim to showcase this to the world. So again, people have mentioned how important SMEs are in the Indian economy. I don't need to go over it, but what's important is the World Bank also says that about 90% of the world's business are SMEs. They employ about 50% of the workforce globally. So any transformation that we have to see has to be led at this level. So first, why global value chains and why do we need to integrate into global value chains? So most global trade occurs through global value chains. About two-thirds or 66% of trade happens through global value chains. And what does a value chain entail? It could be concept, design, production, marketing, retailing, even R&D. These are all part of value chains that are spread across the world. And what has enabled GVCs to develop across the world is better transport links, information and communication technologies, cost of accessing information. So they've facilitated the development of GVCs. Why this is coming into focus again, especially for India, is that after COVID and especially more recently in China and seeing the geopolitical crisis, there's a huge disruption in global value chains that we've seen, and that's also fed into the global inflation levels. So India is emerging as a very attractive option to many countries, and this is why we need to focus on. This is a once in a lifetime opportunity for India to integrate herself into global value chains. So some of the challenges that we've mentioned that have been talked about, the cost of logistics, capacity constraints, technology, access to finance has been discussed here extensively, and there's a skill mismatch as well. So these are some of the challenges that we see that face SMEs in integrating in GVCs. So there are two vital ingredients, in my opinion, that for SMEs, connectivity and competitiveness. So much work has been already being done by the government on the connectivity front in terms of investments in physical infrastructure or investments in digital public infrastructure, like the digital payments mechanism, ONDC that was talked about. So these are, for example, that we're creating infrastructure through the NIP, taking a holistic view where social infrastructure is part of it, industrial infrastructure, energy, roads, utilities, ports, airports. So we're looking at building new infrastructure that will definitely aim at lowering the cost of logistics that we currently India faces, and there's a new logistics policy out as well. So boosting competitiveness, a lot of focusing on quality, excellence, and achieving competitiveness to scale is traditionally what economic theory and has told us. And that's what we've seen in the experience of China, Taiwan, Japan back in the day, how their industries grew, and it was really led by the small and medium enterprises of those countries in developing the entire value chain, not just the big corporate behemoths we hear about today. So, like to bring in scale and size in manufacturing, the government of India, I'm sure you're all aware of the PLI schemes, where some of the key sectors that we've targeted are automobiles and components, APIs, pharmaceuticals, medical devices, telecom, white goods, specialty steel. So these are just some of the PLI schemes that have been launched. And again, it's about connecting into various these supply chains and getting part of the export ecosystem. So these are just some technologies that are likely to drive the transformation in the future, which we need to be aware of and see how they could potentially apply to our business, not now, but maybe in the coming years. IoT, digital manufacturing, batteries, biotech, robotics, these are all coming in a big way. And we need to be prepared for this technological disruption that is coming in. So, how do we boost competitiveness at a macro level? So, in the future, I think the countries and even businesses that are digital and green will define competitiveness in the future. Digitally transforming your businesses and processes is one avenue, and pivoting towards green technologies and embedding sustainability in operations is another avenue. So, for example, from 2025, EU is proposing a carbon tax on products that use a lot of carbon intensive inputs in their making. So that is something that we all need to be aware of in the future, and more countries will be pivoting towards these sort of policies to limit their exposure to climate change and climate change inducing technologies and resources. So again, like I want to end by saying there's no one silver bullet that will help integrate Indian SMEs into value chains. It requires a coordination of policies. It requires across coordination across infrastructure, finance, and Ministry of it's also a mix of regulatory issues and ease of doing business, like I mentioned in the final slide, and of course investments in human capital. So it's really a holistic policy package that is needed to boost competitiveness of MSMEs so they become integral part of global value chains. So I'd like to end by saying that the next decade is poised to be India's decade. This is according to a recent report released by Morgan Stanley. So what it's saying is that there are four key trends that are shaping the next decade, which is demographics, deglobalization, digitalization, and decarbonization. So these are the four key trends over the next decade, and where India stands, where the world is aging. India's median age is 29. We're amongst the youngest countries in the world. We're right in the middle of our demographic dividend. So deglobalization is taking place in the world where we're seeing supply chains being broken. We have trade wars going on, trade tensions, whereas on the other hand, India is opening itself up to the world. We are in negotiations with trade agreements with developed countries. We're investing in a export oriented infrastructure. We're ready to be an integral part of the global economy. A lot of the countries worldwide, they're also unprepared for this disruption that is coming from digital technologies. India, on the other hand, we do have a proven digital transformation model. Our public digital infrastructure is aimed at inclusivity. For example, again, digital payments and ONDC, it's all aimed at democratizing the access to technology. And the fourth and final trend is decarbonization, which is really taking hold in a big way throughout the world. Again, India has been a leader in this space. As I mentioned, we were the one of the countries that met our nationally determined contributions 9 years ahead of schedule, and we set even more ambitious targets for 2030. And we saw the National Green Hydrogen Mission launch yesterday. So again, this is one of the fuels of the future that we're looking at to drive decarbonization in hard to abate sectors such as iron and steel and fertilizers. So with these words, I'd like to thank you for your kind attention. Thank you so much.
Thank you, Ranveer. It's very interesting and very useful presentation. Two questions I received on my WhatsApp that how this G20 presidency will be helpful to Indian industry, especially SME sector. Since you are involved in policy making, developing the policy and creating the ideas for the Prime Minister.
Thank you, sir. So I think there are multiple ways through G20 through which G20 can help Indian industry. First of all, that we're having about 200 meetings spread across 55 locations in India. So this is really an opportunity to showcase India. First of all, I think the tourism sector stands to benefit a lot. States are really putting their best foot forward in showcasing their local culture, cuisines, and heritage, and people are leaving with really memorable experiences, and it's really leaving a positive impression of India. Like I was in Udaipur for the first Sherpas meeting, and the state government really pulled out all the stops to display the hospitality of Rajasthan. And a lot of MSMEs and SMEs operate in the tourism sector, and as we know, it's been really badly hit over the past 2 years. So definitely that. And tourism globally is worth $5 trillion. It's a $5 trillion industry, and India holds a share of about maybe 1.5%. So that's really one avenue which stands to benefit. And second, the global handicraft industry also stands to benefit. What we're making sure is that whatever gifts we give the delegate kits, they are taken from local industries. We're trying to leverage one district, one product. We're trying to make sure that they reflect the state's local culture and heritage. And again, globally, this market is worth about $680 billion, and India has a minuscule share. So this is really an opportunity for these industries to go from local industries into global export machines, really, because serving the international market. And finally, the MICE industry also, which is the meetings, incentives, conventions, and exhibitions industry, also stands to get a huge fillip. There are a lot of convention centers in India which can hold a lot of international meetings and and again exhibitions. And globally, this is again a $650 billion industry, of which India has a share of less than about maybe 1%. So these are just a few sectors, and at a broader level, how it will help industries that a lot of states are also investing in the urban infrastructure. They're redoing the infrastructure. They're building up their cities, and these will have benefits in the long term through better connectivity, lowering cost of logistics, and again, just the spillover effects of having better infrastructure and connectivity. And this is also showcasing the states as investment destinations. So bringing in foreign direct investments, more technology, raising productivity. So these are just some of the long-term benefits that are expected to accrue.
Wow, very good information. Yes, please. First, your name, your background, and your question to the and brief question.
I am R.K. Agarwal from plastic industry. You said about mice. So if you go to Germany, on the airport they have written that exhibition is a very big part of their uh, you know, economy. In India, I am sorry, we don't have any exhibition center comparable to Germany, because Germany, in every field, they have the best exhibition of the world. For example, for us in plastics, we go every 3 years to Düsseldorf. They are able to show running machines of any size, and even the parking of that Düsseldorf is more than our Pragati Maidan perhaps. And we say Pragati Maidan ko bahut acha hai. If we want to export, I feel we must have good exhibition centers. My suggestion is one of you can put up along KMP between the NH48 and the new expressway along the KMP.
Sure, so thank you for your suggestion, and I agree. Definitely, India has a long way to go in the mice industry. Like I mentioned, our share is about 1% of a $680 billion industry. But I think a lot of work is undergoing. We're yet to achieve that scale. For example, in Kerala, where we're going to have the second Sherpas meeting, the convention center's construction that was held up for years is now nearing completion soon. So gradually we will get there, and this is an opportunity for us. We're looking at it as an opportunity to kickstart things, and eventually we'll reach the scale where we need to be. But I think we all have to start somewhere, and I think this is a very good start for us.
Rather, today, Prime Minister is going to tell every Chief Secretary of State to build up international level exhibition center in each state. Not only each state, but the major cities, because this is the most important platform where our industry can exhibit their product, their services. They can attract the investors, they can attract the buyers and importers.
No, I am telling you the location. It is a very good location if you compare with IFC.
Absolutely, sir. We'll keep it in mind.
Yes,
Please take it forward.
yes. So, anyone question? Any other question for Ranveer? Okay. Is there an agenda as a G20 presidency with the Prime Minister to stop the Ukraine and Russia war?
See, sir, like India mentioned in the Bali summit, the G20 is a development forum. And when the developed world, G7 world, was trying to put out a statement against Russia, that's how India got the final statement out. Was that reminding the G7 countries that this is a development forum and all security issues need to be addressed at the UN Security Council and the UN. But at the same time, in the Prime Minister's own words, found a way in the final declaration that today's era is not one of war. And definitely that is something that we are working towards. But again, there are a lot of factors at play. But like the Prime Minister said, this India stand is that today's era is not one of war, and we'll try and work along those lines.
No, because this the G20 main objective is global economic development plan. So it is impacting the various countries. So let us pray that the Prime Minister should take initiative and maybe at the Davos maybe announce that also. Let's hope that. Vijay Gupta ji, one of my friend is sitting here. What is your observation while dealing with some companies when they are approaching for a financial need, assessment or a development level or a lacking level? What is your observation?
So, myself Mahendra Khandelwal, I'm chartered accountant and I'm an insolvency and this restructuring practice. I led PwC VRS practice and I did the biggest insolvency of this country, Ocean Power and Steel, which was taken over by JSW. and I did a lot of SME transactions also. So mainly SME, that sector, they are facing a lot of the problem. Basically, first thing that is the collaterals. Second, they are not able to meet out the criteria which are laid down by the financial institutions. So this collateral-led financing should be relaxed more. That is the essence at this juncture for development of SMEs. Instead of collateral based financing, it should be the cash flow based financing, and there should be some relaxation on the part of especially NPA recognition, especially for MSME, because 90 days cycle for MSME, it's hitting them very badly.
Any question to UB? Any question related to UB, their services, their opportunities? Or we can wind up and we can have
Yes,
networking.
my question to Mr. Sanghvi is that really it was a wonderful presentation by you as far as this tech platform which you are having. That is a two-way system, and the way you are explaining that it is available for both the lenders and the borrowers, and all the things are automated. So it is really so. As far as the debt is concerned, that is platform is there. As far as the equity matching is concerned, do you have any plan to start that in case some SME sector or any other corporate they want to have some that kind of thing which you are having?
Not definitely in the short term.
Okay.
We kind of we were actually thinking of this, but as of now, we only want to capture the debt space first.
Okay. Is there any other platform which is available in the market as far as knowledge is concerned? I am not aware about that. That's why I'm asking.
I'm not really sure if we
Okay.
have. I mean, there are a lot of investment bankers, but I'm not sure if there is a platform as such. But just to take this discussion forward, we do offer something called as a venture debt sort of a product on our platform,
Right. Right.
which is basically a combination of debt and equity product structure
Right.
to startups. There are very limited venture debt players in the country today, approximately six, right? That is something that we offer, right? But totally, we are not into equity. Right?
Okay, but that may be a very, very good thing for you because you are already having so much in networking and all these things.
Yeah.
Thank you. Thank you.
Okay, thank you. So, friends, let's give a big hand to UB and Ranveer for sharing their thoughts, particularly for the benefit of the industry. And I'm thankful to UB for joining hands for the providing the value addition to our industry and SME sector. So, friends, let us join for the cocktails and dinner. And, during the dinner and cocktails, let us have a networking chat so that we can exchange information about business activity. We can understand each other's requirement so that this today's evening will be fulfilled. Thank you. All the best, and let's meet up in the backside. Thank you.